Good afternoon, ladies and gentlemen, and welcome to the Audioboom PLC investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, I would like to submit the following poll. I would now like to hand you over to Stuart Last, CEO, and Brad Clark, CFO of Audioboom PLC. Good afternoon to you.
Thanks, Lloyd. Hi, everyone. I'm just really glad you can join us today. Really excited and happy to be able to give you a little more insight on the company, to take a look today at our operations, our strategy, and what we're focused on. I really appreciate your support and your feedback and the tough questions, so make sure you send some of those in. We have a fantastic business, really great story, and I'm just super excited to tell you about it. So let's get started. We'll run through a deck, some questions at the end, and I think to kick things off, me and Brad will just give you a little intro on ourselves. I'm joining you today from New York City. This is where I launched Audioboom 5 years ago, and it quickly became the biggest part of the Audioboom business. 90% of our revenue comes out of the US today. And New York is really the home to the biggest and the largest podcast publishers in the world. So we're in great company in the city, and we have studios in New York, and we drive much of the business operations and sales out of New York City. Before I took over as CEO, I was Audioboom's COO for 3 years previous to that, driving global strategy, driving business development, marketing, and also sales. And before Audioboom, I was running podcast operations for an podcast ad tech company called Voxnest here in New York. Voxnest is a company that just sold to iHeartMedia for $50 million just a couple of months ago. So I'm deep in the US podcasting space. And before I came out to New York City, I was an executive at the BBC focused on digital strategy in their audio division. So again, very heavily focused on podcasting. I've probably been involved in podcasting since around 2008. So there may be no one in the world who has as much time spent in podcasting as myself. So it was a real kind of honor and pleasure to step up into the CEO role at the start of this year. It's been a challenging year and a very successful year, and we'll talk more about that later. But first, I'll throw you over to Brad to give you a little background on himself.
Thanks, Stuart. Afternoon, everyone. Thanks for joining us. So I'm Brad, CFO. I would have been with the company for 3 years in March of next year. We've been a real focus in my time Audioboom to help the business improve operationally, financially, in terms of its reporting and how the business really operates. And I think that'll come across today in today's presentation. Because we made some great strides over the last few years. Before Audioboom, I worked at Brave Bison, another AIM-quoted company, for 2 years as Group FC and then Group FD. Prior to that, I worked for News UK, part of News Corporation, for 5 years in various financial roles there, and trained at Grant Thornton. So, yeah, that's enough about me. So, Stuart, let's go through this.
Thanks, Brad. Let's dive right in. I think the first kind of slide and the first few slides we're going to show you today is just an overview of the industry and the structure of the industry itself, and we'll take a look at where Audioboom sits and what Audioboom does within the podcast space. There was an incredible graphic released yesterday of all the companies worldwide that operate in podcasting, and there were over 200 different podcast companies on that graphic. So this is a much more simple version of that, but if you want to go a little deeper, I suggest you head over to LinkedIn or on my page or my Twitter feed, and you can take a look at that graphic, because it's a real fantastic deep dive into who does what in the podcasting space. But like I said, this is the more simple version. At the top of this industry and the structure, we have big consumption platforms like Spotify, Apple Podcasts, Google Podcasts, Stitcher. Those platforms where all of the consumption and the listening and the connection with the audience is taking place. So everything that Audioboom does, whether that be on the tech side, the sales side, or the content and the publishing side, is delivered to the audience via those major platforms. Underneath those platforms, you have kind of two very distinct operations. You have an ad tech and a monetization operation, and then you have a content creation and a publishing operation. And Audioboom very much plays in both of those fields. We deliver ad tech, we deliver monetization, and we are, of course, a major content publisher as well. And so we are delivering content out to all of those consumption platforms, connecting and growing audience within those platforms, and then monetizing every single listen that takes place on those platforms as well. So that's the structure, I think, of the space. And as you probably know, the industry right now is growing pretty quickly. The chart here on the left-hand side, just highlighting the revenue growth of the US podcast industry. And the US podcast industry is around 50% of the global industry when it comes to revenue. You'll see there the growth for 2020 is at 10.4%. So it's stalled a little bit because of COVID, but as we'll highlight later, Audioboom is outperforming that growth and has outperformed the growth of the wider industry for the past few years. I think the exciting part is that number for 2022, this industry just in the US alone will be worth $1.3 billion. So very strong growth. Obviously, a lot of media attention for podcasting right now, and we will use those tailwinds and drive Audioboom forward as a major player in this space. And that revenue growth, I think, is really being fueled by two things. The first is shown off by the chart on the right-hand side here, which is podcast listening. By 2023, more than 50% of the US adult population will be a podcast listener. We'll be listening to more than 4 episodes of a podcast every single week. So very strong listener growth, obviously, coming into the space. The other part that is really fueling the growth in revenue in the industry is the transition from performance marketing and direct response advertisers that has traditionally been in the podcasting space to those bigger blue chip branding clients. So we're going from a place where we have smaller brands, direct to consumer brands who use promotional codes and URLs to track their podcast advertising, to a place where companies like Ford or Land Rover Jaguar, or in the US here, Home Depot, Progressive, those big companies that spend billions of dollars on TV and radio advertising are for the first time advertising in podcasting. And there are 2 reasons for that. The first being the scale is there now. You can see that with the podcast listeners graph that's on here. So they now have the scale of consumption to kind of shift their focus to podcasting. And the second part is the industry as a whole, with Audioboom included, has done a great job over the last 2 or 3 years of legitimizing the measurement of downloads and the measurement of advertising inventory, which means that those big brands and the agencies that represent them now trust podcasting as a medium and are spending more and more money in podcasting and growing that revenue chart on the left-hand side. Audioboom is a major player, particularly here in the US, but also in Australia, also in the UK. These are 2 rankers for podcast consumption. The first is Podtrac, a US-based company, and the second is Triton, a global measurer of audio and streaming audio, and also now podcasting. So Audioboom is either the 5th or 6th largest podcast publisher, depending on which ranker we look at. And just to kind of draw your attention, I think, to the competitive set here, we are by far the smallest and of the businesses in here with limited resource compared to our competitive set. So when you look on here, you're going to see Westwood One, second biggest radio company in the US, multi-billion-dollar company. Entercom, third biggest radio company in the US. iHeartRadio, the biggest radio company in the US. The New York Times, ESPN, a huge sports broadcaster. Draw your attention to Stitcher, a company that sold recently for $320 million to Sirius XM. So the company we kind of keep is major, and we are podcast focused. We are podcast first, and that's allowed us to grow at an incredible rate and keep this company and be part of the kind of top echelons of this industry. I want to kind of give you a view next on what Audioboom kind of actually does, what we do, what our focus is on, and what we've kind of grown over recent years. So I think the easiest way to show this off is to take a look at what Audioboom did in those kind of formative years, the 2014 to 2017. We effectively grew an incredibly strong and scalable platform. So that platform is a technology platform for the hosting and the distribution of podcast content. It's an ad tech platform to dynamically insert ads, to integrate with programmatic and ad exchanges to monetize that content. And then it's a premium sales platform from our in-house sales teams in New York and also London. And that platform, that owned and operated platform, grew out over those years between 2014 and 2017. And it's extremely robust, it's extremely strong, it's market leading. And as I said before, it's incredibly scalable. So the kind of the second part and the second phase of our growth strategy is to really scale a content operation on top of that platform and allow that platform to monetize and to distribute every single piece of that content. And that content operation and the scaling of that content operation is really focused on our original content and the shows that we produce in-house and the shows that we develop in-house through our Audioboom Originals brand and our production arm. It's the work that we do with publisher partners, third-party producers, and the work that we do with them to distribute and to monetize their content. And it's also a group of subscribers that use our platform and our tool set, and they pay us to do so. And that growth and the scaling of that content operation has been pretty phenomenal to this point. We're now at 85 million downloads per month across the entire platform, and we reach more than 25 million unique users a month. So that's where our focus is. The platform doesn't need too much work at this point. We've built something that's extremely strong and works very well for us. But all of our focus, all of our investment for the future is really on focusing that content business. And I think I talked about the platform, the ad tech and the monetization piece, and then the content piece, and that really highlights for me the unique selling point of Audioboom and what we do better than anyone else out there, and why we're able to be in the top 5 or 6 podcast publishers in the world against much bigger competitors out there. And it's because we have 3 key parts to our business. We have the tech part to the business, that's the platform and the distribution and the ad tech. We have the monetization piece, which again comes from the ad tech, but also our incredibly efficient in-house sales teams. And then we have the content part, which is our own publishing arm and the work that we do with third-party creators. And right now, the consolidation that's happening in the space is happening around each 3 of those elements. So, the big 3 companies here, Spotify, Intercom, Sirius XM, they are paying hundreds of millions of dollars right now to create podcast businesses around those 3 key pillars of tech, content, and monetization. And I think it's incredibly smart of Audioboom to build out those 3 pillars in the early days of its business and to be growing around those three pillars, and it allows us to compete and allows us to excel in the podcasting space right now. Before we jump into a view, on our content strategy, because obviously I just told you all that's the key focus going forward and the key part of our investment going forward. I think we just kind of pause and take a look at the financial performance, because our growth story is super strong. We've had a incredible year against the backdrop of COVID, and I think these are some numbers that might be familiar to you all. Our Q3 year-to-date revenue at it's 18.3 million. Now that's up 18% year on year, despite the impact of COVID. So we've been very resilient to COVID, and the industry has been resilient to COVID as a whole. And we've rebounded very quickly from Q2, which was more deeply impacted by COVID than any other part of the year. Our market expectation for 2020, again, as you probably know, is 25.5 million. So I think what we've done a really good job of just in the last kind of 2 years, and something that Brad has been particularly focused on, is ensuring that that we go through that market expectation, we outperform that market expectation. And right now, with just 3.5 weeks of the year left, we're extremely confident that we will go through this 25.5 million number and outperform that market expectation once again. Going back to the revenue growth, I think the one thing I do want to highlight here is just how Audioboom is outperforming the rest of the industry. So we are outperforming that competitive set. Our growth of 18% year on year this year is 93%, 92% ahead of the industry growth. So while the industry as a whole is resilient to COVID, the efficiencies that Audioboom has in its business, has enabled us to grow even faster than the rest of the industry. And we have outperformed the rest of the industry over the past 3 years, and we will continue to do so as well. So, we're a major player, strong revenue growth, and continuing to grow faster than the wider industry. I'll throw over to Brad for a couple of slides here. Brad's going to take a look at some of the other financial metrics.
Yeah, thanks, Stuart. So yeah, just building on what Stuart said there, just to refresh for those familiar with us, and also for those people who are new to the company. So just want to explain a really simplistic view of the P&L, just so everyone understands what it is. So, if you look at our top line revenue, that's simplistically the advertising revenue that we generate through our in-house sales teams. Our cost of sales are our payments to our podcast partners, so our revenue share payments. Our gross margin, which runs at 22% this year, is the retention of that advertising revenue generated. So typically with our podcast partners, we split the revenue share, split the revenue that we've generated, typically 80-20 or 70-30. But our gross margin across the business is at that 22%. In terms of OPEX within the business, again, very simplistic view is that 66% of our OPEX is within salaries, commissions for our staff within the business, technology costs, and by that I mean hosting and bandwidth costs account for around 15% of our OPEX. So it's just a very simplistic view of our P&L. So we've got very good top line growth above the wider industry mark, and a narrowing EBITDA loss position as well. So to the end of September, there's a 32% year-on-year improvement, and that's we've achieved that through continued good cost control, ensuring that the resources that we do have are allocated appropriately to continue to drive growth. And this company really is very efficient in terms of what it does. The headcount within the business currently is 35. If you compare that to others within our industry, it's excellent. Acast are one of our biggest competitors in the UK, released their 2019 annual report recently, and their headcount is over 200. So we've got 170 less heads. So we're very, very efficient in terms of what we're doing. As well as the good top line growth, narrowing EBITDA loss position, the cash burn within the company is decreasing as well. So on the right hand side, we can see that that's decreasing half on half. And by net cash burn, what I've done here is strip out the big impacts on the working capital, and by that I mean any fundraisers or any loan drawdowns, and I'll come to that shortly. But any loan drawdowns that we've done in those periods. And also I've taken out the content partner advances. So to sign new talent, a certain select number of partners we pay recoupable advances to. Those are recoupable over the life of the deal, but they do impact working capital. So what I've done there is just stripped out those impacts on the working capital, just to show the net cash burn half on half. So that's improving as well. In terms of the cash cash position. So the balance sheet is strong within the company. We recently announced over a £3 million subscription, which was at a premium to the share price. We've also got a 3.3 million loan facility available with SPV Investments Limited. That's fully available. We've actually repaid the $700,000 of that 4 million loan facility following the subscription that we announced in October, and the funds that we received in November. So the company has no debt currently, and a very, very strong balance sheet, the strongest certainly in my time here at the company. And to build on that, those improving metrics, there's absolutely utmost focus and importance on the cash within the company. So on the left-hand side here, we can see cash collections. Now, obviously, the revenue is increasing, so I would expect, obviously, as well, that the cash collections to increase as well. But that being said, we're averaging at the moment $2.2 million collections per month. That's 34% higher than last year's average at 1.6 million. So yes, although the collections are increasing, it's because of revenue increasing. What the actual key point is that the debtor days are decreasing significantly year on year. At the half year, they were 58. 2017, they were 139. Now, I'd expect at the year end for them to tick up slightly to around the 70 mark. But again, if we reference one of our competitors, Acast, they reported a debtor day of 110 at the end of 2019. So again, it's just highlighting the efficiency and good performance within this business currently in terms of that key metric continuing to decrease. Now, the reason why we've been able to drive that performance, or one of the main reasons why we've been able to drive that performance, is because of our bespoke Salesforce CRM system, which connects various different parts of the business, being the content that we have available, the sales bookings that we have are logged on there, and that flows through to our finance system. So that just allows us to generate really good quality data, which is accessible all through the business. We're able to put that information out to our customers and partners, and we're able to, in this example, simplistically collect cash that much quicker, continuing improvement year on year, and better than our competitors as well. And that Salesforce point as well is the final point from me here, is that that the company now is in a place where we are very reliable and timely in terms of the reports that we give to the market in terms of financial performance. So first quarter, third quarter, we typically update the market within 10 working days of the period end, and for the half year and the full year, typically by the 20th of the month, we give the update to the market. So that's really is just a reflection of the improvement that we've made internally, the ability that we have to report to the market, and another benefit of the Salesforce system that we have as well, an important benefit, is that we're able to see what revenue we've got booked in future months and in future periods as well, so we can see how we're going to perform over the coming months and year. So that really is a benefit for us. So okay, back to you, Stuart.
Thank you, Brad. We'll dive right in, I think, on the content strategy. This is the real focus for the business. This is what we're scaling. This is where we are investing, and this is the bit that directly leads to the revenue growth for the business. And I think the key thing with Audioboom is that we deliver value for a podcaster of any size, and we've built a platform and an operation that delivers that value all the way down this content pyramid. And this is how we view content within the business, and I'll break it down for you. At the tip of this pyramid, AON is Audioboom Originals. This is our in-house production team, shows that we develop internally, that we own and operate. We have 28 Audioboom Originals today. We monetize them in the most premium way within the business. We have studios in New York City. We're extending and expanding the studios and the production facilities in the coming years. And kind of most importantly, I think that Audioboom Originals have a very strong gross margin attached to them. So a gross margin on those originals is more than 40%. And as Brad mentioned earlier, the kind of the average gross margin across the group is around 22%. So Audioboom Originals delivers a stronger gross margin. It allows us to control our content output more so than any other part of the business. And it really is the key part that we will invest in the coming years. I'll deliver you more information on that later in the presentation, but we'll grow and expand production facilities. We'll bring more producers into the business. We will market and take to market and grow audience more efficiently for those shows through investment as we go. The second part to this content pyramid is what I call our premium sales network. So this is the work that we do with just 250 top tier podcasts. They are premium independent shows. We work with them to host, to distribute, and to monetize their content. And again, they are monetized in a premium manner, high CPMs between $25 and $45. And these shows have audiences between, at the bottom end, 50,000 downloads per episode, and at the top end, 2 million downloads per episode. And in terms of the revenue performance from these shows, at the top end of this tier, the top 3 or 4 shows each deliver more than $2 million in advertising revenue to the business each year. So these are really is that the top tier of shows. These are the shows that you'll find in the Apple podcast charts top 50, and it's the biggest and also the fastest growing part of our business. And one of the reasons why we grow this part of the business so quickly is the work that we have done on the business development side. So 3 years ago, most of our work to sign shows to the platform was done through outbound business development. Today, all of the opportunity that's coming into this premium sales network is inbound. It's coming through the major Hollywood talent agencies and the relationships that we hold at WME, at CAA, and at UTA, and various other talent management and talent businesses. They present us almost daily with opportunities to work with their biggest clients, their biggest talent. We partner with them to monetize and to help grow audience for those shows. So a huge part of Audioboom's revenue is the work that we're doing with the biggest third-party podcast publishers. That third tier on the content pyramid is definitely more of a volume play. It's a network of more than 1,500 podcasts that we monetize through our advertising tech. So while the top 2 tiers of this pyramid, we are selling in a very bespoke way. We're selling live reads and host endorsements that are delivered within the fabric of the show. The third tier here is all about automated ad tech delivery. So those shows are made available in our ad tech layer. We then connect into programmatic ad exchanges, PMPs globally, and we fire in, dynamically insert pre-produced 30-second ads in pre-roll, mid-roll, and post-roll positions throughout that content and wherever those podcasts are listened to. So, as I said, it's a lower value play. CPMs are between $4 and $12, but we're doing this at scale, and it's the fastest of recent times. It's been a very fast growing part of our business. So we have increased the revenue that's coming out of that automated ad tech part of the business by more than 7 times in the last 8 or 9 months. So since April of 2020. More than 7 times growth on that ad network and programmatic part of the business. And then the final part of our content are the shows that pay us to use our toolset, our hosting and distribution platform, and our analytics services. So these are generally enthusiast, hobbyist level content creators. There are more than 4,000 of them on our platform. They either pay us $10 a month or $20 a month to use that tool set. And all the growth in this part of the business is organic. We've never spent a penny on marketing this part of Audioboom. And I think there's real kind of upside here because right now there are more than 100,000 new podcasts launching every single month. And we are probably capturing just around 100 of those podcasts. This will be an area that we do invest in. We will grow our subscription platform. there's a fantastic gross margin on here of around 92%, because really the only cost to Audioboom is the bandwidth and the distribution cost. It's a kind of a self-serve platform, and the cost attached to it is extremely low. So we will invest in Audioboom Originals at the top. We'll invest in the subscription platform at the bottom, and then the middle two parts, the business development work that we do there, will grow out those networks very quickly over the coming years. This is a pretty complex slide, but just to break this down, this slide really is a case study on how we work with a content partner, and how we work to develop their audience, and then develop their advertising revenue. So once we bring a show on board, through our business development, our content team and our ad ops team kind of take over. They coach that show in best practice around how to build audiences, around how to deliver advertising, and they really kind of work hand in hand with them to grow that show. And this is just an example of one of our top 5 shows that joined us in the middle of 2018. In the first month they worked with us, they just delivered around 6,000 downloads. As of the summer of this year, they were delivering more than 3.5 million downloads every single month. And next year, they will deliver more than $3 million of revenue to the business. So we work very closely with our biggest podcast publishers, very connected to the talent involved in those shows, and we grow with them, and we help them scale, and we help them deliver a really top quality product. One more kind of case study here, and I think this shows how the content pyramid that I showed you a couple of slides back really actually acts as an incredible business development funnel as well. So this is a show that joined us just around a year and a half ago on our subscription platform. So when they started working with us, they were paying us $10 a month to use our tool set. Internally, through the CRM system and our dashboard that Brad mentioned earlier, we can flag any podcasts that are seeing strong audience growth. Once we see strong audience growth from that podcast, our content team will reach out to that podcast, make that connection, and build a relationship with them. And we start to upgrade them through the various tiers of that content pyramid. So the first thing that we did was we removed them from our subscription platform, and we took them into our automated ad network. We fired in programmatic ads, pre-produced ads through our technology, and we started to make around $10,000 a month from that show as it grew audience over time. As that audience continued to grow, we moved it up into our premium ad sales tier, began to sell advertising from our in-house sales teams in New York and also in London, and very quickly took that show to a place where it will, in next year, deliver around $3.5 million to the company. So by having that full stack content pyramid where we were able to deliver value to content publishers all the way down that pyramid, we're also able to grow shows and work organically with shows to take this show, True Crime Show, from the place where they were paying us $10 a month to use the platform to a place where they would deliver more than $3.5 million in revenue next year. Audioboom Originals is, a key focus of mine. I talked a lot in the past about the shift in Audioboom from a services and a technology company to being a creative, content-driven business, and Audioboom Originals is at the heart of that. As I said before, we have a production team in New York. We have studios in New York. We have plans to open facilities in London. And in Los Angeles to access the talent base in both of those cities. This is a group of 28 shows today that are developed and produced in-house. We grow audience through marketing across the wider platform or through paid marketing in other podcasts. We have IP ownership that allows us to deliver revenue from touring, merchandise, TV and book adaptation. And the key thing about, and I think the smartest thing about Audioboom Originals is the way that we use data to inform our development process. So we have, incredible amount of audience data coming in to the platform from the 85 million downloads that we receive every single month. We also have incredible data coming in from the advertising side and the demand side of the business. And we're able to start to use those insights to develop new content. And I think just one kind of very clear example of that is a show that we launched just 2 months ago. It's called Because Mum Said So. It's a parenting show. And we were seeing incredible audience growth and audience engagement around the parenting shows, the third-party parenting shows that we worked with. And then we were seeing incredible demand from our advertising partners for parenting shows and the audience connection that comes from them. So that allowed us to internally develop a treatment for Because Mum Said So. We also just launched another parenting show called Raising a Pro. And already those are selling very well and growing really strong audiences. So we're very data-driven in how we develop those shows, and that comes from having the wider platform and the incredible scale in our content operation. The other part of what we do in our production strategy is to grow shows around key tentpoles. So we work very heavily with sports shows, with true crime shows. We are able to develop shows in similar genres and then use those tentpole podcasts that deliver more than 1 million downloads per episode to market the launch of our originals and bring in audience very quickly so we can go to market from day one with those Audioboom Originals. And this is a plan that has worked very well for Audioboom Originals. Revenue is around 4% of the entire Audioboom group revenue comes from Audioboom Originals in 2020. But we have goals to deliver more than 15% of group revenue by 2024 with relatively kind of low risk attached because we develop these shows in a very efficient way. We have a huge platform to market those shows against, and we have a very strong sales unit and sales team to go out and to monetize that work. So we'll increase significantly the number of owned and operated podcasts in that network. As I said, we'll take the revenue from those Audioboom Originals up to 15% of group revenue by 2024. We will keep that gross margin and hold that gross margin above 40% on Audioboom Originals versus the 22% across the group. So we're delivering a higher contribution there through Audioboom Originals to the bottom line. I've talked about the studios and the production teams that we'll open and expand. And we'll also increase the marketing and the promotional budgets to create more impactful launches. So this is a key part of our investment. It's a key focus for me and the content teams in the UK and the US right now. And it's an incredibly powerful branding play as well, because we increasingly become more well known for our content creation amongst audience as well as the industry. So right at the top, I think I talked a little about how we created a really fantastic scalable platform in the first few years of Audioboom that we're now building this content operation on top of. I want to step back and just give you a view on that platform, even though we don't invest too heavily in it right now, because it's built, it does it does its job. It's an enterprise level platform. It's robust. It's like I said, it's fully scalable. But to give you an idea of what that platform is, and I'll jump forward to this slide. This is the technology piece of that platform, and it starts out, I think, with a content management system that allows podcasters to upload into a dashboard to manage their content, to distribute that content out to all of the major listening destinations, and it provides them with a very user-friendly and very simple way to manage that distribution. On top of that, we have our advertising tech. So podcasters are able to set advertising markers within their content that we can then fire dynamic ads into within the content of those episodes. We can also connect that content to ad networks and programmatic exchanges, so we can deliver advertising at huge volume. The next kind of part of that tech platform is our Salesforce CRM integration. So this is a bespoke build for Audioboom. It allows our ad operations team to efficiently deliver advertising across the hundreds and thousands of podcasts that we work with. And as Brad said earlier, it's an end-to-end solution. So it runs the whole process from booking the advertising with an agency or an ad exchange, the execution of that advertising with each of the individual podcasters, and then the flow of data back for billing purposes, and the flow of data back to the agencies to highlight the impact of each of those advertising campaigns. So that's a powerful piece of kit for us. And then the final part of that tech platform is really the analytics package that we have, which enables us to gather incredible insights. So this is a package that's certified by the Interactive Advertising Bureau. It's the latest version 2 of the podcast advertising measurement standard, and delivers consumption data, demographic data, and some really strong audience insights. So that tech platform and that ad tech platform is really at the heart of what we do, and allows us to build the content operation on top. Just jumping back into the sales part of that platform and our monetization strategy, and I think this is a really good area of focus for us. As I said before, we have in-house sales teams in New York and London. They are delivering the real premium end podcast sales piece. We then have external sales partners in Australia and in Canada. Australia through Australian Radio Network, Canada through Rogers Media. And these are our third and fourth largest consumption markets. So our listening levels in Australia and Canada are growing fast, and are the third and fourth biggest markets for us. And we have sales partners in place in each of those territories. So our sales strategy is kind of linked to that content pyramid that I showed you earlier. The phase 1 monetization is really the premium end of things. So this is host endorsements and live reads. It's sold by our in-house teams and our external partners. The CPMs are very premium, $25 to $45. The advertising is baked into the content of the podcast. And these are performance-driven campaigns, so they have optimal audience engagement. The performance of those campaigns can be tracked by the advertiser, and it's delivering a really strong amount of revenue to the business, and is really the premium piece of what we do. Once we have been running that piece of advertising for 90 days, we then move to the second window, or the phase 2 monetization. What we do here is we remove that advertising, that baked in premium advertising, from the podcast, and we replace that 1 or 2 minute ad with an ad marker that allows us to dynamically insert pre-produced ads into that piece of content. So what we're doing here really is we're starting to monetize the archive more effectively. And this is something we've really been focused on for the past 6 months. Previously, we were really only able to monetize that first window. Now we're more effectively monetizing a second window beyond 90 days. So if a piece of content is listened to, it launches today and is listened to today, we monetize it in a premium way. If it's launched today but not listened to for another 100 days, then we can still monetize it, but at a lower CPM, between $15 and $25, again, sold by our in-house teams and our external partners. And then we have that third phase of monetization, which is really the kind of the fill, the remnant inventory, anything that isn't filled in phase 2 at that kind of mid-level CPM. We then throw it into our global ad networks and our programmatic exchanges, and we see CPMs are between $5 and $12. It's high volume again, but much lower CPM. So this just optimizes our monetization, doesn't leave money on the table, and really drives a lot of value for our podcast partners. I think the next couple of slides are just to highlight some of our key performance indicators. You may be familiar with these. We put these out every quarter alongside our financial updates. But our KPIs really do, really are a indicator of the health of this company and the growth of this company. And the first one is brand count, and this is simply Audioboom's growth in active customers. How many advertisers or brands that we work directly with from our in-house sales team during a quarter. And as you can see here, growth has been incredible. It did dip in Q2 of 2020. That's an impact of COVID, but already heading back in the right direction, and we expect a full return to normal in Q4 and again in Q1 of 2021. Another KPIs is what we call our Ecpm. This represents the value that Audioboom is able to extract from 1,000 downloads. So we can compare from partners in its entirety. We are able to kind of just see how well we are optimizing our revenue. And again, you'll see the same dip here in Q2 of 2020 for COVID, and then a return to normal in Q3 and Q4 should be a record-breaking KPI, Ecpm KPI for us, as Q4 is extremely strong and is so every single year. So those KPIs directly highlight the health and the growth of the company, and those continue to head in the right direction. And then just one kind of, I think, further slide to highlight, which is really the levers that we have within the business for greater upside. And I've talked to some of this already today, but geographic expansion is an area that we are beginning to focus more and more on. We obviously have our presence in the US and the UK. But we just launched new partnerships, as I said, with Rogers and Australian Radio Network in Canada and Australia. And this is really our first steps into those territories and will allow us to get a foothold in those markets in a very efficient way. And over the longer term will allow us to start to really model out and create that expansion into those next two biggest territories for us. Another kind of upside area that we haven't explored to its fullest yet, I think, is just the IP exploitation through Audioboom Originals. So this ability to turn our podcasts into TV shows, adaptations, merchandise, book deals, tours. The more content that we create in-house, the more opportunity there is to exploit the IP. I've talked a little bit just a moment ago about how we're beginning to monetize more effectively the archive and this vast archive of content that's on the Audioboom platform. We will continue to do that, and I think over the next 1 to 2 years, you'll really see the results, the revenue results of effectively monetizing that back catalog. And that's a technology play in the main, and we're really starting to see the value of our investment in technology coming through and allowing us to fully exploit the archive. And then as we increase that subscriber base and as we invest in paid marketing for that subscriber base, those shows that pay us $10 or $20 a month to use the platform, we'll see more examples of shows graduating through the ranks and becoming more valuable to us as advertising funded podcasts as well. So some key areas I think to look out for over the coming years as we grow out the business. And then just I think in summary, before we jump into the Q&A, it has been a very positive year for us. We've continued that growth story, 18% year-on-year growth, outpacing the industry growth, significantly reduced EBITDA loss. We're expanding Audioboom Originals. We're ready to accelerate the growth of our content and our production business. We're a global leader. We are the 5th or 6th biggest US podcast publisher, the largest international podcast publisher in Australia. And with the industry forecast to grow 150% between 2019 and 2022, the resilience in the industry and then the tailwinds that creates for Audioboom just means that we're in an incredible position to continue this growth story and to have even more success in the coming years. So that's the presentation from us. That's a few of the areas that we wanted to highlight, I think, today. Back to Lloyd, I think, before we jump into some Q&A.
Yeah. Thank you, Stuart. Thank you, Brad. Thanks both very much. Ladies and gentlemen, please continue to submit your questions using the Q&A tab situated in the top right-hand corner of your screen. But just while the company takes a few moments to review those investor questions submitted already, I I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. I'd also like to remind you that your feedback is important to the company. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Stuart and Brad, I know we haven't given you long to review the questions submitted today, but I wanted to hand back to you for you to respond to those questions where it's appropriate for you to do so. Could I ask you to at the top, please, and also ask you to read out the question before giving your response.
All right, will do. Thank you, Lloyd. Okay, so I think, yes, predictably, the most popular question that's coming from Martin D and a few others is really about the sales process. So this is, please tell us more about the sales process and why it didn't end with the sale of the company. So yeah, I think to answer the second part of that question first, it didn't end with a sale because it was just way too early to sell this business. We're just hitting our stride. We have huge growth ahead of us, huge growth behind us. We can bring, and we understood that we can bring more value to shareholders by continuing this ride independently for the coming years. I mean, to tell you a little more about it, and I can't talk too much, and I'm a little bit limited in what I can say because we're kind of still still governed by the takeover panel here. I can tell you that we did engage with more than 20 businesses that were interested in learning more about the company. Those businesses were globally based, although many were in the US. They were major media organizations, broadcasters, music companies. I was actually, very pleased, I think, to see the breadth and the range of businesses that were interested and are looking to place podcasting within their businesses. So I think, one key thing and one really good thing is that although at this point there have been 3 main players consolidating at SiriusXM, Entercom, and Spotify, there are so many more out there that really want podcasting to be part of their business, and over the next few years, I'm pretty sure we'll spend money on podcasting. So that's great to know, because it just really highlights the interest in podcasting and the interest in a business like Audioboom that is very much a leader in podcasting. So we did talk to. We did go deeper with several interesting parties, and we got to the place where we were talking about valuations. But it was just very clear that the publicly available stock price was an anchor to those valuation conversations. I mean, we talked about valuations at a premium to that stock price, but no one, it could not be justified internally for any of those potential acquirers to pay multiples of that publicly available stock price. So the stock price was an anchor and didn't get any of those valuation conversations anywhere close to where they needed to be for us to really deliver the value that we wanted to deliver. And I think the other part is, through that time, we emerged from COVID. We rebounded very quickly from COVID. We saw, the growth trajectory ahead of us. Again, we're very confident in where we're taking this business, and it was clearly way too early to sell at just a small premium to that share price. We will create a lot more value for this business by being independent for the coming years, for sure. I think one thing that did come out of the process was feedback from some of those potential acquirers, and something we heard a few times was about the need for our content business to develop further, particularly the original content and the owned and operated content piece. And that was kind of fantastic to hear, I think, because it supported the strategy that we brought in a year or two ago to focus heavily on the growth of Audioboom Originals. So that's, I've highlighted that today. That's where we will invest in the coming years to grow our Audioboom Originals and the owned and operated content piece around that. And, that will make us, more valuable and a stronger business going forward. So, look, I think it's obviously the question we've been asked a lot. And it's to me very clear that we went into a process way too early. It wasn't the right time to look to sell the business. We have an incredible amount of growth ahead of us, and we will be a bigger and stronger company for it. Let me just jump back onto the Q&A section to get another question for you guys. Okay, so I think this is another popular one today. It is, when does this business break even? And what does break even look like? So yeah, it's another great question. Again, to answer that second part first, break even is relatively kind of simple to calculate for this business. We know it's on or around $35 million, and doing the math to get there is pretty straightforward. We know that the market expectation this year is 25.5 million revenue and a $1.9 million EBITDA loss. Our cost base is relatively fixed. We're scaling this without adding a lot of new costs. We don't need to hire any new team members to get to that break-even point. So at that 22% margin, you can draw that line from those market expectation numbers to see that break-even is around $35 million. So we know where it is. We know we're heading to it pretty quickly. We know it's kind of on the horizon, and we are focused on getting there. If you look at this year, we'll because of COVID, we will be a few million down on where we would have wanted to be. So we would have been very close to that 35 million break-even number in 2020. It's within touching distance now, and it's what we are all very focused on getting to. Okay, let's see what else we have. This question is, how protected is the business against COVID-19 and any further lockdowns? I think the first thing to really think about is the industry. In itself, it's continued to grow this year, albeit a lower kind of 10% growth rate. But it's as an industry, as an advertising supported industry, it hasn't been impacted in the same way that television or radio has. I mean, radio here in the US, the majority of radio businesses were down 50% in Q2 year on year. And around 20% down in Q3 year on year. So huge impact on the radio business. But podcasting continues to work for advertisers and continues to attract money from advertisers. So there should be no real kind of issue around the demand side through any other kind of COVID issues. I think secondly, Audioboom itself is probably the most efficient podcast company in the world. And Brad talked to it earlier. We have a team of 35, whereas our competitors have teams between 80 and 200. We've built in an incredible level of automation within the business, fantastic processes that allow us to be that efficient. And I think, I think that 35 headcount number is the lowest that has been in this business since I've worked for Audioboom in 5 years, and we were carrying a lot of fat for a long time. But now we have a very clear strategy, and each one of those heads is attached to that strategy. Each one of those roles drives the business forward. Each one of those roles is directly linked to revenue generation. for the first time in a long time. So again, as I said before, we don't need to grow out the cost of staff, which is our biggest cost, any further. So we're incredibly efficient. The industry is growing as a whole. We're really well insulated. We've built automation into the platform. I don't have too many concerns about COVID impacting the business any further. I think maybe we have time just for one more quick one. Let's see what we have. Okay, so this is a good one to wrap up with, perhaps. It just says, how do you judge the performance of the business this year? So as you all know, I officially started as CEO on the 1st of January of 2020. Walked straight into a premature formal sales process, which could have been a huge distraction for the business. Then literally 2 weeks later, we were hit with a global pandemic. So it's been a challenging year, quite a challenging first year. But I think overall it's been an incredibly pleasing year, and we've proven what an exceptionally strong business we have created that has been, resistant to a global pandemic, and has continued to grow. I'm pleased about a lot of things within the business, pleased about how we continue growing through COVID and how we were protected against that. I'm pleased to continue growing this company independently. It's the right way to go. As I said, the sales process was premature. We're just hitting our stride. I'm pleased that we have capital within the business for the first time. And while we've had, similar levels of capital or fundraisers before, this really is the first time that we've had a clear strategy that the entire team is buying into, so that money will be spent in the right way and will drive significant growth for the business. I'm pleased that we've outperformed our competitors. We've grown faster than the rest of the industry. I'm pleased with the kind of brand that we've created and the understanding within the industry that Audioboom is a leader in what we do. And I'm really pleased with everything this team has done and how they've reacted to COVID, how they've reacted to working remotely to continue to drive this forward. So it's been for me a very positive year. In my first year in the job, and I think more than anything, what we've done this year is we've just set ourselves up for more success. Next year we're focused on it being a real kind of breakthrough year for the company, and we have great growth plans, really strong strategy that I hope we've been able to convey to you today. I'm really excited about moving this forward.
Stuart, that's great. Thank you so much. I think you've addressed most, if not all, the questions submitted today. I know you will review all questions submitted by investors, which we may not have had time to get through. However, I'm mindful of time and the fact that investor feedback is important to you. Perhaps, Stuart, I could ask you just to wrap up before we redirect investors to give you feedback.
I'm sorry, Lloyd, I missed the last part of that.
Although I recognise in your final response to the question, you may have covered a lot of it already, but if you would like to wrap up just before I redirect our investors to provide feedback for today's event.
Yeah, I think I covered a lot of it, but look, it's an incredible company. We have all of our internal processes. We've got this together. We know where break-even is. We're focused on getting there. We just need to work hard to get that share price up. We feel we're incredibly undervalued as a business, and we know that needs some focus, and we are focused on it. But the fundamentals of Audioboom are strong. The strategy is great. We have a really good business model. We're a leader in what we do. It's going to be an exciting few years, and I hope you guys can come with us, and we do appreciate the support and the interest in the business.
Stuart and Brad, thank you very much for your time today. Could I ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback. If you access the meeting from our website, the feedback page will appear. However, if you access from the link sent by email, you will be asked to log in order to submit your feedback. On behalf of the management team of Audioboom PLC, we would like to thank you for attending today's presentation. This concludes today's session. Good afternoon to you all.